So today's webinar is, we have 45 minutes. I'm going to try and move along here relatively swiftly. As always, please post your questions in the Q&A or the chat. It won't let me type in, I don't know why, it won't let me type in a response to the Q&A, but obviously I can read it visually. And let's get cracking here. So the title for today's, as always, please fire away any questions, and I'll pick those up as I go along. And so we've got 45 minutes. The topic for today was, if it's not working, we've got to change some things. I want to talk about that, but for some reason, trading is one of those things where you get preconceived ideas, and then that's it. So sometimes it's best to look at changing those. And then I want to give us a good 20 minutes, 25 minutes to maybe do some analysis, look around, see what we need to do. If you remember the previous 4 or 5 month webinars, we were talking about Aussie longs, S&P shorts, etc. And I think that's happened. You know, we were talking about 67, 68 for Aussie going up into the 70s, and that's materialized, and we, you know, some S&P things. And I think the water's got a little, yeah, we'll look at some of that stuff. We'll try to piece it together. I think the waters have got a little muddied on some stuff now, you know. And I think it's a good time to take a look. All right, but let me cover the subject matter. I don't want anybody to get grumpy because I've gone totally off topic. So let me cover that, and we'll move along. All right. So I don't necessarily do this anymore. Maybe I don't know why, but I don't. I used to. You guys know that I used to work with Wayne, right, at FX Bootcamp and do teaching and etc. And I don't do that anymore. And I used to do private mentoring, and I don't do that anymore. But what a lot of the things that I used to see come up were obviously repetitive stuff. And I've even thought about maybe opening like a YouTube channel and just having people send in a trade idea or a previous trade, and then doing like a video a day critique of that plan. You know, I thought maybe there's an educational benefit in that. I don't know. I don't, you know, is it worth the time? I don't know. But I'll tell you a quick story. So, morning, Dave. So I have a friend who has done very little in the way of trading. But his philosophy is, all you got to do is buy a stock or several, and then when you're old, you'll just cash them in and make money. And this is how everybody gets rich, and there's not much to this trading thing. It's no big deal. Because if you look, 2008, the market was low, and now it's high. It's too easy. You just, even if I'm early now, it's fine. It'll always go up. Look at the market. It's always gone up in our lifetime. And I've obviously tried to explain that that isn't exactly how this whole mechanism works, and that things change, and there's something else that is a little something else called a bear market that needs to be addressed, right? And it's possible. Now, I will concede that he's right to a certain extent, that, you know, if you bought equities any time in your lifetime and you've held them for the last 20 years, that they've gone up. I mean, you can't really fight with that logic. Although I bet you that when you are 54 and you lose 40% and you are down 40% on your portfolio in 2 months, that you're probably gonna have some kind of hernia. All right. So my point to this tale of woe is that we all have these preconceived ideas of how this needs to be done. All right. And a lot of times that is contingent on our personalities, our relative psychology, isn't it? For some of you, for some of us, we can sit in trades for months. It's no big deal. For others, sitting in a trade for 2.5 minutes takes every bit of fiber in their being. All right? My point is this, though. If you are a surgeon and you are trying to fix somebody's heart arrhythmia, for instance, a cardiologist, and you're trying to fix their heart arrhythmia and you treat them with beta blockers and medication, and their arrhythmia persists, and then you treat them with a radio frequency ablation and their arrhythmia persists, and then maybe you do like a very high speed cryogenic thing and their arrhythmia persists. Sorry for butchering this, any doctors in the crowd. My point being, though, is that you keep trying different things. All right? But you don't keep trying different things just sporadically. You try them systematically. So you know that one thing doesn't work, and then you move on and try something else. Okay? For some reason... yeah, I hear you, Dave. For some reason, we don't do this in trading. We are happy to run around to 75 different systems per se, but the duration of how we hold trades, the management of how we hold trades, the way we work out a bias for that trade, that remains the same. So really, as I've described previously, you can trade off support and resistance on a grand scale and be fine. That's all you need. It's really all you need. Everything else is sort of tinsel on the top of it. All right? So my point is this. If you have been losing money one way for 2 years, maybe it's time to think about employing a different method. And I'll give you an example, all right? To me, the most sort of blatant way of fixing something like this is as follows. If I showed you, and I've shown you this many times, so it's probably going to be fairly boring, but for arguments, let's look at this DAX chart. All right? If you are somebody that, and most commonly I see this, David, I'm right, but I'm losing money. It's a common fault, isn't it? You're right about a lot of stuff, but you're still not making any money in Forex. And most times that's you're early, you're late, don't let profits run, cut things too short. It becomes messy. All right, so I'm going to specifically talk about that problem since it's the most prolific one I see. Okay, so let's say that, and I want you guys, just while I'm rambling here, I want you to think about a few biases, I'm not sure what the plural is for bias, that you have on some things. All right, now I'm going to paint a scenario. Let's say that you are a serious hedge fund manager. You have $300 million under management. And it's faceless money. You don't know whose money this is. You have no emotional attachment to it whatsoever. If I came to you and said, I want to position in the Forex market, where would you put me? And then I said to you, right. Or then you start to think and say, good question. Where would I put you? Okay. So then let's go through a few currencies. If you were trading the commodity currencies, so CAD, Aussie, Kiwi, and we can ZAR here, we can peso, you get the idea. Commodity stuff, NOK, SEK, Russian ruble, etc. what, where, or how would you position these people? Would you be biased long or would you be biased short? I'm asking a question now, by the way. Overall, would you be bullish or bearish on this stuff? I'm not sure that I mean, this is a personal opinion now, right? There's no right or wrong answer here. Okay, the consensus in the room is bearish. I happen to be bullish. But this is why there's a market. Okay, this is why there's a market. And I'm going to draw to a point in a minute. All right, what about Euro? And specifically Euro USD. Bullish or bearish? Just depends on the level, really. But I think overall pretty bearish. All right, so this one, we're going to put, like I said, this is just a broad stroke look at things. Okay, Euro. All right, what about pound? And specifically, relative to the dollar, relative to the euro pound might be a different story. Relative to the dollar, it's kind of hard to say because central banking policy is a little mixed up. All right. How about the USD itself? Yeah, kind of neutral. USD itself, I think we've got to be fairly bearish here. Even though, we talk about the euro being a pile of whatever. Fairly bearish just because of grandma, right? Coming out. I mean, the Fed, even if they raise interest rate, it's going to be for the wrong reasons. Okay, what about the yen crosses? What about specifically the carry trade? Oh, by the way, the other thing on the euro, guys, is okay, so there's some marks a massive bull on the dollar. And like I said, these are just market opinions. And this is me saying you in a brick and mortar office and somebody rolls in there and says, here's 300 mil. I need you to position this money in the Forex market. You're probably not going to be worried about what's going to happen on a 2-minute basis. He goes, here's 300 million. Don't worry where it comes from. And I'll see you in 18 months. Make me some money. How about the carry trade? Bearish on the yen, in other words, USD yen going higher, essentially. Oh, bullish on the yen, in other words, yen dropping. Right. In other words, yen strength. I happen to agree with that, Mark. Yeah, I think this is down. I think this is down. I happen to believe this is up. But that's, like, I don't want to impress my personal opinion on you. Pound. Depends on the level, really. It's a range. Yeah, so my point being here is this. I see so many people dying by virtue of 1,000 cuts. What I'm trying to say is that maybe approaching it from a different standpoint is smart. And maybe this is the way to do it. I think the Swissies, basically the inverse of the euro. The thing about the Swiss franc and the euro dollar is this, guys. Is that they've become funding currencies. That's very evident to me. They're so sensitive. I wish I could overlay the euro with the S&P 500. If the S&P is going up, the euro tends to lose some strength. If the S&P is going down, the euro tends to gain some strength. And obviously the inverse for the Swissy, the trend's been bucked a little bit lately because of the severe dollar weakness that happened right at FOMC. But to me, I don't really want to get short the euro. I don't really want to get short the euro with the stock market looking like it wants to drop necessarily. I'd like to short the euro once I see equities approaching something that looks like a bottom, just because of the way the correlation's shaped up, if that makes sense. Somebody said being short the S&Ps and long the commodity stuff, those trades are offsetting. You know, because the S&P going up is really a lot like getting long commodities, it seems, from a correlation standpoint. So you can't, you know, you're going to really hedge yourself a lot by taking both sides of that, if that makes sense. So for me, I got out of a lot of Aussie stuff and into a lot of S&P shorts because I can't have the, you know, now still trying to pick up Aussie stuff where it makes sense, but it doesn't make sense to me having both sides of that at the moment. All right. So my point with this is as follows. If you were trading this bundle here, somebody says, I want emerging market exposure and you're the currency analyst. Okay. How would you approach this? Go to say this euro or Aussie. And those of you that were, you know, those of you that were bearish, you know, where's your sort of range? And those of you that are bullish, sort of range? It's 1,000 pips, 1,200 pips. Yeah, I don't disagree with you. We just talk about currencies for argument's sake, Alexander, but I don't disagree with you, yes. All right. My point with this, though, guys, is if you are going to be short, that's your zone to be short. And if you're going to be long, here's your zone to be long. All right. And I've said this before, maybe this helps you in the way you approach stuff. And you go, I don't know, long, 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 long. Short, short, short. In between, dead. Do you guys know anything about the yellow-bellied sea snake? It's from the cobra family, grows to about 1 meter and change, lives in the Pacific. All right, 10 times more venomous than a cobra. I mean, this sucker is properly venomous, and he needs to be. He can only stay in the water for a few minutes, and it's pretty useless on land, but it's adapted to living in the water pretty much. And the way it hunts is as follows. It cannot swim around underneath the surface and chomp fish, and that's all it feeds on. So what it does is it goes up to the top, and it's air breathing, obviously. It goes up to the surface, and the little fish are drawn to debris on the surface as sort of sun protection and protection for themselves. So they go up there, and the fish just float on top of the water, or the snake does. And then the little fishies come along and use the snake as refuge, thinking that it's sort of garbage on top of the water. And the snake can strike up to 1 meter in half a second. And then what it does is it zaps the fish that has taken refuge underneath its stomach. And it's an insidious thing, and forgive me if you're offended by this nature story. But then what happens is that the fish dies very, very quickly because of the potency of the venom, and the snake can eat it. And this is how it hunts. So my point being is this. If you are trading excessively in between support and resistance zones, you probably the fish trying to swim around catching fish. But by waiting for these major turning point areas, you are playing this sort of insidious sniper role where you're just waiting and waiting and waiting. All right. So if you are dying from a million cuts in the market, don't be afraid to wait and pick major turning zones. Then take 4 or 5, 6 trades in that turning zone and then do some more waiting. All right. So that's today's lesson on patience, bias, understanding. And think to yourself, if I was a portfolio manager, how would I be doing this? I'm not talking about direction. I don't care about I, this is a fallacy, by the way. The big boys are doing X. The big boys know more than Y. That's not, in my mind, I mean, whatever. Who cares if they do? Who cares if they don't? This is the hand that we dealt. It's nonsense. They're just people like you and I. Um, so, they have more money. Right. They can put on a bigger trade, but they are people like you and I. So their opinions carry just as much weight in terms of the significance of their decisions. Right? Because your $1,000 and their million are equally significant to you relative to your lifestyle. All right, so let's take the next 24 minutes and try to figure out where we're going on some stuff. Which I think has become, yeah, happy to look at the Swissy. Let's do Swissy, pound, Australian dollar, S&Ps. Okay. The Swiss. What's at play here? Grandma playing the fool with the dollar. And here's my point. Let me do this. I'll just link these. Unfortunately, there might be a indicator where I can overlap the currencies. It probably is. It would be good for an educational sort of benefit. But let me just show you these charts comparatively here next to each other. Here is a euro. Let's just look at the last 4 or 5 hours. All right. Here is red, green. Green on the S&Ps, red on the euro. Red on the S&Ps, green on the euro. Now this one tied in with the retail sales number, which, by the way, the numbers out of the US and Europe are a shambles. I don't know if you saw the pound unemployment today. Not great. Not great, like to say the least. My point being here is you're going to see a pretty tight correlation between what the S&P is doing and what the euro is doing. It's very apparent to me that euro is a funding currency, and these repatriation flows are strong. It's the trash returning to the trash heap, and the trash owners, like, open arms, come on in. Okay, now, here's something to consider on the euro. If you remember, we were talking about longs at 107, and that trade's kind of come and gone, I think. Massive trend line, big support, etc. I don't think it's inconceivable that the euro kind of pushes up here, particularly if the stock market's going to drop a little bit. Let's say that the euro's found its bottom. All right, it's very unlikely that we do, something like this. If, mimicking this move. So we'd be down here. I think that's less likely that is hypothetically the way that this works out. I think more likely is this. 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 1 you know, bottom, neutral, and then. Okay, so in other words, I think that we perspectively sort of somewhere in here on the euro. And to find the bottom, generally you've got to go through a neutral period. Okay, so if that correlation I'm talking about remains consistent with the stock market, then that means something on the stock market too. You know, and if anything, this, you know, I'm looking at sort of something like this on the euro. You know, and then a more neutral sort of thing. It's difficult because, by the way, thanks for humoring my snake story. I'm not sure where that one came from. It's interesting to me because this is a 1,000-odd pip move. Fundamentally, though, it's tough because grandma's doing everything she can to murder the dollar right now. And you've got to remember, guys, that verbal interventions, like the Fed has done, is a means of central banking policy, isn't it? By saying, hey, we're going to raise rates, we're going to raise rates, we're going to raise rates, and the dollar strengthens, is a very effective way of slowing the market down a little bit without actually raising rates. It gives you just that one extra piece of room, right? Little bit of piece of room. No, it's not great English. So if anything, I'm looking for sort of something along these lines for the euro. And this is based on, obviously, if I zoom out a ton and I look at the dollar index too, dollar index is effectively Swissy. It's the reciprocal. Big support, big support. The next level up from that is 118. But this support zone is more like 1620. Stochastic still solidly up. You got a little higher low here, and a double bottom of a fib of the rise. You know, so you don't even need the fibs, but I just put them on there for reference. So you kind of got this going on. Little double bottom at support to the rise. So we expect a little higher high, I would think. All right. So, you know, I don't think it's inconceivable to see sort of something like this develop. $118, and then a push down towards 107. It's my 2 cents on that. So I'm more bearish on the euro. So I will be shorting a little bit here at 15 and change, and a lot through here between 16 and 17. Get out of it, step aside, and then look to short sort of 17 to 1850, looking for 107 and whatever else. Okay, now understand that this probably has to coincide with the S&P getting ready to turn up. If the correlation remains the same, obviously things can change and we've got to observe that. If the correlation starts to change, well then you just adapt with it. But that's the most likely scenario is S&P finding good support at the same time, and I use S&P for every, you know, stock market reference, just equities in general, Dow, whatever. At the same time that Euro's finding resistance, it's likely that you're going to see a buying opportunity on the S&Ps as well as a selling opportunity on the euro, assuming that correlation remains consistent. Right, so if I'm looking for euro to push up another 100 pips here or so in the short term, that probably means, and then a hiccup, so up on the short term, a hiccup. You know, this is probably going to mean S&P down short term, and S&P up, and then considerably down given this move. So what does that look like on the stock market? Here's your daily. Little daily higher low at that 1880 mark. Did I lose you on that? Do you guys understand? I, I get highly technical sometimes, and it makes sense in my brain, but maybe it's like chewing cardboard for you guys. I don't know how it translates, but if I've lost you on that, by all means, let me know. See, here's a monthly S&P, and this is serious downside stochastic here on the monthly. It just doesn't happen that much. All right. It makes me believe. It makes me believe that we're in for a larger retracement, and I had sort of 1740 zone in mind. And if I take a fib of this last major rise, that's a 382 is right around that 1740 mark. You know, room for it to go a little bit lower, but this to me was sort of reasonable expectation on it. And I'm saying this because it's significant given the correlation for those of you trading the euro. This is something you want to watch. Because sometimes maybe the euro is a mystery, but the stock market's not. Then you can apply an inverse correlated logic to the euro to trade the euro. That's how you use correlation, by the way. Otherwise, it's just nothing but academics. Oh, that's cool. So the euro goes up when the stock market goes down? Yeah, that's cool, man. Yeah, but it's using it. How do you use that? It's like the same friend telling me about the stock market. He's like, oh, my friend at HSBC, he said the VIX is sky high, therefore the stock market should go down. I'm like, that's nonsense. The VIX being sky high, which it isn't right now, is actually a sign that the market's bottomed and you should be looking to get long. Yeah, but the VIX says there's lots of fear. I'm like, yeah, it says there was lots of fear, but we know it has a distinctive range. The VIX is at 12 or 13. You know, there's lots of complacency in the context of this market, in the stock market. Therefore, it's probably time to get short. Yeah, but isn't that when fear is at its lowest? Yes, that's the time when there's complacency and you should get short. So what I'm trying to say is that sort of logic is the same as this in terms of correlation, because you use it as a foresight, not a hindsight. So daily, clearly lots of traffic here. Incidentally, this channel break, this is an interesting little technical thing here. This little channel break here, you know, if you take that measurement and project it down, that's almost exactly the magnitude of that initial move, by the way. Obviously, lots of resistance here around sort of 2040, and this is spot S&P. If you're trading the futures, it's about 10 points less. All right. So lots of stuff there around 2040, and also some things, you know, where it fought with the other day, around the 2020 mark. But if remember, we're looking for euro to push up into the 15s and then make a move down. So I think that's going to look like something like this on the S&P. Down towards sort of 1980 as the euro pushes up. And then you're going to have very bullish daily stochastic coming off the higher low. I think we are going to push up into this zone. So short at the moment, get out, stand by, let it rally up, start shorting, short, and then look to take this down, you know, back towards the 1860 zone with option for it to go into the 17s as the euro pushes up from sort of 1340 towards the 17 handle before getting shorted. And hopefully when the euro gets towards 18, this S&P is somewhere around 17.5 area, and this will probably be a cheeky little long taking it back towards 19 and change. as the euro drops. Does this make sense? So I'm a bear here, so my plan is to put in a bunch of shorts through here and give that a go. So let's talk about the pound. Difficult. And I say it's difficult because it shrugged off really bad news today. I'm almost more comfortable trading the pound yen because I'm bullish on the yen. So far, you guys tracking me? And if you've been following these webinars, we've made some good calls this year. I mean, the silver buy took a long time, but it's happened. The Aussie longs, the S&P short, it's been okay. It's been solid. Euro Aussie, we got scorched on. All right, so here is pound. Try to find a chart with a few less lines. I think the major problem with the pound is simply the range. You know, and the other thing to think about here too is the euro pound. Now, how much right, here's a euro pound, and if I go to the monthly here again, you know, check this out. You know, it depends on how you see the support and how you see the resistance, but that's effectively where we are, right? Is support and resistance. The trend is arguably still down, and now we're running into this high traffic zone. You know, pushed up yesterday towards 75, and now it's back below the short-term support. Go to daily. You know, here is your sort of shorter-term support, which we arguably right at. So this is something that even if it's going to break higher, wouldn't we expect, given that resistance I just showed you on the larger term, I would expect maybe that this wants a piece of kind of a larger retracement. You know, so conceivably we see something like this materialize. Double top, down, you know, and then maybe it charges back up. So that means pound strength probably today, a little sort of dollar correlated day, and then some euro strength, pound weakness. So maybe that coincides with 55.20 on the pound. You know, this move, and pound drops back to 53.5 from 50.20 kind of thing. And then a large push down, which is going to mean pound relative strength. It doesn't necessarily mean euro short, but it does mean pound relative strength. Am I losing you on this? I hope I'm not. This is what I'm saying. Hey, the waters are muddy because this isn't just a cut and dry thing right now. It's requiring some brain power. Okay, so let's go back to our pound here. Remember, we're in an overall range. Do I have a mind and size of the move before significant reversal? In other words, so the question is, I think it. I want to make sure I understand the question specifically. Do I have a mind and size of big moves before significant reversal? I think it largely depends on where we're coming off stuff. You know, like this, we'll go back to that euro pound as an illustration. Is we're coming off massive area. Yeah, Dave, you don't think you want that. We're coming off. I'll have a look at that. I'll have a look at the peso. You know, we're coming off a big area of resistance. Therefore, I expect a big reaction. You know, the pound, I don't think today's pound news was like distinctly negative, and the pound's powered right through that. And to be fair, I've got to be honest with you, I've been a little bit out of sorts with the pound. I haven't done a ton of trading on this pair because I haven't been in touch with it. We haven't been connecting on an emotional level. Largely just depends on where you're coming off. Said differently, if we go look at, let me just finish up with the pound and I'll come back to your question and we'll run over to the peso real quick. And I also want to look at Aussie. So we got 3 minutes to spin this out. Pound, I think, is going to continue up towards as high as sort of this 55.20 zone, which is this resistance. And that at the same time is going to take the euro pound from sort of the 73.40 zone down, I'm sorry, 73.40 up back towards the high of 74.80, which I think will push the pound back into this range. But then I actually think that pound will continue up here, more towards the 56 level, something along those lines. I didn't even see this as a long here, to be fair, even though it was support. I thought that we could do something to 150. I wanted to long 150. I have orders in here. So I don't get any of this. It doesn't make a ton of fundamental sense to me. All right. So let me talk about the Aussie, and it'll hopefully. I do not know, Mark. Here's the Aussie. You see, to me, it's a little bit no man's landish here. I still argue that this trend line's in play to a certain extent. Stock market obviously is a big deal here. Oh, pending orders, yeah. Yeah, I mean, what I'll do is I'll just stack it up. Like the Aussie, I'll just do. Going back to that, how big a move do I expect? Well, shorts from here, because it's such a significant area, I expect, a move back towards the support. So what is that? 600 pips. And so differently, longs through here, I expect, because I think Aussie is going to go into a bit of a neutral phase, I expect to push right back. So what's that? 800 pips. The stuff in between is obviously the magnitude relative to what the stuff in between is. All right, makes sense. So it largely depends on the technical level. So if we go, and I'll come right to that peso, I haven't forgotten. If we go to the S&Ps, I'm not expecting a massive move down here because I think it's come off sort of a mid-level support and or resistance, and where's the support? It's sort of this 80 zone. So 20 to 80, that's 40 points. This to the next level is 60. This from 2040, 2050 down is prospectively, the middle of that zone is 100 points down. I'm thinking more like this. So what does that constitute? 150 points, and more like 17 and change, so as much as 200 points. And that's because of the springboard, technically, where it's coming off of. I can tell that I've lost a few of you today, so I hope that you're kind of, without being too bored, following along here. The peso, I think, is topped. Like the South African rand, I think the South African rand might have topped. And I think this is, despite coming out this big time support, I think that's a short towards 17. Looking for sort of a second level jog down, something like this. Down towards that 1580 mark, so 17 to 1580, something like that. Obviously this, see, here's the tough thing, because for the peso to gain a lot of strength, the stock market has to go up if the correlation holds. So really, when you take anything on the commodity side, if you're getting long a commodity currency, you really want to take a good look and make sure that you're not about to get clobbered on the head by a stock market drop, because then you might be disappointed in your commodity trade. All right, makes sense. We kind of got highly technical here. I hope that you followed along reasonably. We chewed up 45 minutes. Thank you, FX Street. Guys, a good way to reach me is Forex David on the twit, FOREXDAVID. I try to respond to everybody's questions there. And it's a good way to reach me during London hours because I'm up. All right. And thank you very much for attending. Thank you, FX Street. And we will catch you next month. Take care, guys.